Namaskar and a very good morning. Welcome to the audio cast from Kotak Securities. I'm a host and guide, Anindya Banerjee. As global cues are looking slightly positive, the Asian currencies are trading higher against the dollar, even though the dollar index is flat. Asian equities are trading in the green, ignoring the weakness in the US stocks overnight. And oil prices are down $3 from 95 to 92, possibly due to the weak Chinese economic data. Both the retail sales and IIP numbers, the industrial production numbers from China, have been much lower than expected. Today, USD INR in the offshore market is trading lower, closer to 81 on the spot. Now, jab tak 81.40, 81.50, this zone is intact on the spot, the trend is still downward because price action ke hisab se lower low and lower high is getting formed. In fact, now we can say that yesterday's high, which is closer to 81.40 ke aspas, that becomes a very important resistance level and also a very important pivot. जब तक उसके नीचे है, मतलब 81.40 के नीचे है spot, तब तक the bias is downward. Kal, due to some bunched up corporate flows and stop losses getting hit in the OTC market, जिसके कारण we saw a short covering rise. But looks like the positions have been unwound, so now the market is back to trading based on global cues and domestic flows. So 81.40, 81.45, as I said, is a major resistance zone. So jab tak uske niche hai, the bias is down. But at the same time, 80.40 say 80.50, this becomes a place of formidable support. So we are possibly going to play in this range of 1 rupee of 80.40 and 81.40 for some time now. Which means जब तक ये range में है, हो सकता है volatility may come down because at least the weekly VIX or the weekly implied vols had jumped significantly, close to 8% yesterday because of this big up-down move over the past 2-3 days. So now as the volatility comes down, one of the trades can be to short straddles and strangles. Because jab tak ye range is intact, 81.40-45 on the up and 80.40-50 on the down, the straddle and strangle can be short. But remember, these are trades which have unlimited risk and therefore you need to have proper stop losses and position management. If you don't want to take that risk, then you can stick with hedge trades like iron flies, which we always prefer, क्योंकि उसमें the margin deployed compared to a straddle is nearly half, and of course it doesn't have the risk of an unlimited risk, so you don't have a risk of a margin call. और ये generally देखा गया है कि intra-week you can have a sudden move on the down or on the up, which creates an impression of a breakout or a breakdown, but that turns out to be false and the market gets back into the range. So wo sab situation mein an iron fly can be quite beneficial because these false breakout moves or breakdown moves and straddle and strangle shot will be stopped out, but an iron fly can hold the trade till expiry. So iron fly remains a better trade. Butterfly is a more of a positional trade where expiry is like 3-4 weeks away and more, so that's a more of a expiry related play. But if you are looking to play with weekly options, then iron fly as a hedge trade is a better option. But the idea is that we could be in a range bound kind of a price action, so short options can be one of the ways. But otherwise, if you are looking to play through futures or directional bets, then any move towards let's say 81.30 say 81.40 ke beach on the November futures can be an opportunity to short with a stop above 81.5 on a daily closing basis. Because global sentiment is looking a little risk on, and the comments from this the Fed members, like the vice chair from the Fed and other members, is clear that Fed is now looking at slowing the pace of hikes. It's already at 4, the Fed interest rates. Another 50 bips in December gets it to 4.5, and then possibly another 50 bips, and then Fed pauses because various projections are clearly saying that the inflation in America could slow dramatically in over the next 6 to 9 months, which would mean that Fed can pause. And that's the reason why we are having this trade where dollar has weakened, emerging market currencies have done well, and emerging market equities and bonds have done well too. Cross currencies may Euro INR and GBP INR can see buying at lower levels. But overall, intraday bias is going to be range bound to slightly upward. Yen INR could remain in a range. So that's it, folks. This is Anindya Banerjee signing off. Have a fantastic day ahead.